Welcome, everyone. Right now, many are fixating on the MACD indicator, which confirmed a cross earlier this week. Understandably, some are feeling anxious. However, I want to explain why this isn't necessarily an overwhelmingly bearish sign for Bitcoin's price. First, let's examine past occurrences. In April 2021, when the MACD indicator signaled a bearish cross, Bitcoin reached an all-time high followed by a notable downward movement. Similarly, a few months later, with Bitcoin hitting around $70,000, another bearish cross on the MACD led to another significant price drop. Yet, if we focus on recent price action, just a couple of months ago we experienced a bearish cross on our MACD indicator, and indeed Bitcoin saw a downward push. However, what followed was a continuation towards a new all-time high. So, it doesn't quite add up for us to automatically anticipate a new lower low whenever we observe a bearish cross. Moreover, although the current cross is confirmed, Bitcoin's price is already showing signs of decline. Additionally, we have a setup for a potential. Just recently, we witnessed a bearish cross on our MACD indicator, prompting some concern. However, amidst forming significant higher lows, we're also noticing a slight lower low on the MACD indicator. When we begin to curve towards the upside, not only will the bullish cross be significant, but it will also confirm a hidden bullish divergence on the weekly time frame. This divergence isn't exclusive to the MACD indicator. It's evident across other key indicators like the money flow and RSI on the weekly time frame. Considering we're still trading in an uptrend on the weekly time frame, this indicates a bullish signal for Bitcoin. Despite the current bearish cross causing apprehension, it presents a favorable opportunity for buying or taking long positions on Bitcoin and other altcoins. Zooming into the price action, particularly on the 2-hour or 1-hour time frame, we observe Bitcoin bouncing around the $61,200 area, which previously served as a support level due to the golden Fibonacci ratio. However, there seems to be a battle between bulls and bears around this level, as indicated by significant volume increases and indecision in the candles. Buyers appear slightly stronger for now. Regarding support levels, the volume area at $61,633 holds significance and aligns with a new trend line of support formed by connecting higher lows on Bitcoin's price. Losing this support and the trend line would signal a bearish turn for Bitcoin, possibly leading to lower targets. Keep an eye on my Twitter posts for updates on our next target, likely around the liquidity level near $60,000. In addition, on the 4-hour time frame, we encounter another set of significant levels. You might recall the diagonal resistance area we recently managed to breach to the upside. This diagonal support level has been holding up well, indicating its strength. If Bitcoin were to begin a downward move now, this support level would likely remain robust, potentially aligning with a key Fibonacci ratio. However, if Bitcoin consolidates in this range for a bit longer before a downward move, the Fibonacci ratio may not align precisely with our diagonal level. In such a scenario, our next target would be the 1-to-1 Fibonacci extension at $58,000. Now, let's discuss why I'm still leaning towards a bearish stance and prefer to see lower targets. Firstly, we have a bearish market structure on the 1-hour time frame, as we failed to form a new higher high. Secondly, the average trend on Bitcoin remains bearish, with the exponential moving averages indicating a downtrend on both the 1-hour and 2-hour time frames. However, if Bitcoin manages to hold above the value area low and our diagonal support level, rallying higher instead, we'll need to adjust our trading strategy. In that case, I'd turn bullish once we confirm a new higher high. Currently, although we're forming a new low, the absence of confirmation for an upward move, such as a swing failure pattern or a liquidity grab, suggests the potential for further downward pressure. It's crucial to remain adaptable to changing market conditions. Additionally, on the daily time frame, we're also awaiting a breakthrough of a brand new daily high on the time frame area of resistance. Currently, we're yet to witness this crucial break to the upside. It's evident that we lack significant bullish signals in this area. To establish a bullish market structure, we need to surpass key resistance levels, such as the aforementioned daily high and the liquidity level above our previous highs. Only then can we confidently anticipate higher price targets for Bitcoin. If you're interested in trading alongside us, Be sure to secure some incredible free bonuses using the links provided below after your initial deposit. And thank you for showing your support by hitting the like button. Today marks significant developments for Bitcoin, folks. I'll dive into short-term events impacting Bitcoin's price and recent long-term shifts. Stick around for the entire video. Welcome back, everyone. I'm Chris, delivering daily cryptocurrency insights. If you're new, hit subscribe and the notification bell. Looking at the daily time frame, we recently saw a pump to the orange box, followed by rejection, landing us at $61,000. My overall thesis remains: expect sideways movement, facing resistance at $63,500 and support at $57,600. Consolidation between these levels persists, but I anticipate a breakout to the upside eventually. The traditional market strength bodes well, historically aligning with Bitcoin's upward movement. All in all, things are progressing as expected. Now onto altcoins. Be cautious with altcoins as many are experiencing significant token unlocks, prompting investors to sell. Given the current sentiment, there might not be enough buyers for these unlocked tokens, leading to a general decline in altcoin prices. While some outliers may perform well, overall, as Bitcoin remains stagnant or declines, altcoins are likely to follow suit. This presents an opportunity to accumulate promising altcoins for the future, but be mindful of inflation and token unlocks impacting your holdings. My strategy remains focused on leveraging altcoins for short-term gains and converting profits into Bitcoin. As we monitor these dynamics, remember to keep an eye on the overall trend, with altcoins showing larger declines compared to Bitcoin over the past week. While meme coins are surging due to meme culture and short squeezes, it's essential to assess each altcoin's potential amidst the broader market movement. Altcoins, apart from meme coins, aren't performing well, with some like Cosmos down by 10%. Compared to Bitcoin, they're faring much worse, indicating a trend worth monitoring. Yesterday's higher-than-anticipated PPI and core PPIC suggest rising production costs, hinting at inflation becoming a concern again. Today's inflation data will likely impact the market, with outcomes either better or worse than expected having significant effects. As Bitcoin's network activity declines, indicating a moment of capitulation, it presents potential buying opportunities as interest wanes due to price stagnation. Wisconsin's $163 million investment with pension funds is noteworthy, as pension funds manage over $24 trillion, making them significant players in the financial markets. This involvement signals a major shift, potentially influencing ETF investments and market dynamics. Institutions typically take about a year to show up in 13FS after the launch of new products like ETFs. However, with the recent Bitcoin ETF launches, we're seeing early institutional involvement, indicating a positive trend. Expect more institutions to follow suit, as they tend to move in herds. This initial wave of institutional participation bodes well for the future, especially for spot Bitcoin ETFs. For more insights into my trading strategy and current market outlook, check out the video linked in the description. Also, don't miss out on the best deposit bonuses available, ranging up to $30,000 on Bybit, $60,000 on OKX, and $40,000 on Bytat. Thanks for watching, and see you in the next video.